Welcome to the world of dividend investing. Imagine a stream of passive income flowing into your account, effortlessly growing your wealth. That's the power of dividends. This investment strategy has been a cornerstone of wealth creation for decades, offering both financial stability and long-term growth. Dividend investing is not about getting rich quick. It's about making your money work for you, generating a steady stream of income that can help you achieve your financial goals. Whether you're saving for retirement, a down payment on a house, or simply seeking financial independence, dividends can pave the way. In this comprehensive guide, we'll unlock the secrets of dividend investing, demystifying the process and empowering you to make informed decisions. We'll explore the fundamental concepts, delve into expert insights, and showcase real-life success stories to inspire your journey. Get ready to discover a proven path to financial well-being through the power of dividend investing. Let's begin. Dividend investing is about owning a piece of a company and sharing in its profits. When you invest in dividend-paying stocks, you become a shareholder. These earnings are distributed as dividends, typically paid out quarterly. Think of it like owning a rental property, receiving regular rental income. Companies like Coca-Cola, Johnson & Johnson, and Procter & Gamble have a long history of paying dividends. Dividend investing is a powerful strategy for building wealth over the long term. Dividend investing offers a compelling combination of benefits, providing a consistent stream of passive income, putting money in your pocket without requiring active work. This income can supplement your earnings or be reinvested to accelerate your wealth growth. Dividend-paying companies tend to be more established and financially stable. Their stocks often experience lower volatility, providing a smoother ride during market downturns. Dividends can act as a hedge against inflation, preserving your purchasing power over time. By focusing on quality companies with a history of dividend growth, you can build a resilient portfolio.
To gain further insights into the benefits of dividend investing, we spoke to renowned financial expert Sarah Williams, CFA, a portfolio manager with over 20 years of experience. Dividend investing offers a sense of stability and predictability, especially during times of market uncertainty, says Williams. When markets are volatile, dividend payments can provide a cushion, reassuring investors that they're still receiving income from their investments. Williams emphasizes the importance of focusing on companies with a proven track record of dividend payments and growth. Look for companies with strong financials, sustainable business models, and a history of increasing their dividends over time, she advises. Remember, dividend investing is a marathon, not a sprint, Williams concludes. By staying disciplined, investing consistently, and reinvesting your dividends, you can harness the power of compounding and build significant wealth over the long run.
Section 5. Getting Started, a step-by-step guide. Embarking on your dividend investing journey is easier than you might think. Here's a step-by-step guide to get you started. Begin by expanding your knowledge of dividend investing. Read books, articles, and reputable financial websites to familiarize yourself with key concepts, strategies, and terminology. Define your financial objectives. Are you saving for retirement, a down payment on a house, or simply seeking passive income? Having clear goals will guide your investment decisions. Assess your comfort level with risk. Dividend-paying stocks generally offer lower volatility compared to growth stocks, but it's essential to choose investments that align with your risk appetite. Decide where you'll house your dividend investments. You can open a taxable brokerage account or a tax-advantaged account like a Roth IRA or traditional IRA. Look for companies with a history of paying dividends consistently. Consider factors such as dividend yield, payout ratio, and dividend growth history.
Section 6, the magic of compounding, growing your wealth exponentially. Compounding is the secret sauce of dividend investing. It's the snowball effect in action, creating a virtuous cycle of growth. Imagine investing $10,000 in a dividend-paying stock. In the first year, you earn $400 in dividends. Reinvest those dividends and your investment grows. Over time, compounding can significantly amplify your returns. The longer you stay invested, the more your wealth snowballs. That's the magic of compounding at work. Section 7 case study, the Coca-Cola story. Coca-Cola, the beverage giant, stands as a testament to the power of dividend investing. The company has a remarkable track record of paying dividends consistently for over a century, increasing its dividend payout for 61 consecutive years. Imagine you had invested $1,000 in Coca-Cola stock in 1988. Today, that investment would be worth over $20,000, thanks in large part to the company's consistent dividend payments and dividend growth. Coca-Cola's story highlights the importance of investing in companies with a durable competitive advantage, a strong brand, and a commitment to rewarding shareholders. By aligning yourself with such companies, you can participate in their long-term success and benefit from the power of compounding. Section 8. Dividend investing versus growth investing. Dividend investing and growth investing are two distinct investment approaches, each with its own merits and drawbacks. Understanding the differences can help you determine the best strategy for your financial goals. Focuses on companies that pay dividends consistently, providing a steady stream of income and potential for long-term growth. Targets companies with high growth potential, aiming for capital appreciation rather than dividend income. Dividend investing focuses on income and moderate growth, while growth investing focuses on capital appreciation. Dividend investing generally involves lower volatility, whereas growth investing can be potentially higher in volatility. Both approaches can be long-term, but growth investing can sometimes have a shorter time horizon. Dividend investing includes companies like Coca-Cola and Johnson & Johnson. Growth investing includes companies like Tesla and Amazon. The best investment approach depends on your individual circumstances, risk tolerance, and financial goals. A diversified portfolio often includes a mix of both dividend-paying and growth stocks, providing a balance of income and growth potential. Section 9. Risks and considerations. While dividend investing offers numerous advantages, it's essential to be aware of potential risks and considerations. Companies can cut or eliminate dividends if they face financial difficulties, economic downturns, or changes in their business strategies. When interest rates rise, dividend-paying stocks can become less attractive compared to fixed income investments, potentially leading to lower stock prices. Every company faces unique risks that can impact its financial performance and dividend payouts. It's crucial to research companies thoroughly before investing. While dividend-paying stocks tend to be less volatile than growth stocks, they are still subject to market fluctuations. Avoid investing too heavily in any single company or sector. Diversification is key to mitigating risk in your portfolio. Section 11. Conclusion. Embracing the long-term vision. Dividend investing is a powerful, wealth-building strategy that empowers you to become a part owner of successful companies, sharing in their profits and participating in their growth. It's about embracing a long-term vision, planting seeds today that will bear fruit for years to come. Remember these key takeaways as you embark on your dividend investing journey. Dividend investing is a marathon, not a sprint. Be patient, stay disciplined, and let the power of compounding work its magic. Thoroughly research companies before investing, considering their financial health, dividend history, and future prospects. Spread your investments across different companies, sectors, and asset classes to mitigate risk. Reinvesting your dividends is the key to accelerating your wealth growth and harnessing the full potential of compounding. Dividend investing is a journey of financial empowerment, offering a path to passive income, long-term growth, and financial freedom. Start investing today and watch your wealth blossom over time.